A wise man once told me about the power of three. That means manipulation, consolidation, and distribution. And that's the cycle that happens in all markets. Where are we at now? Pretty sure we're close to the end of the manipulation part. But I still think we're being manipulated. And then we're going to talk about consolidation and eventually how the heck we're going to get to distribution. So, a lot to talk about, a lot of charts to go over. I'm going to try to get to them as quick as I can. But, yeah, let's do it, baby. Okay, there we go. I was going to say, for some reason, my microphone decided to turn down all of a sudden. That was weird. Um, anyways, Ted, Bodies and Wicks, how are you guys doing today? Happy weekend. Sorry, but I'm only putting out like one video a week. My new job is draining me. Working 12-hour days, so I apologize that I've not been on top of it. But I have been paying attention, believe me, because I have to, because my trades depend on it. I just haven't been able to get in front of a camera and talk about it. So, yeah, like I said, my mentor, one of the things that we first learn is, the power of three: manipulation, consolidation, and distribution. And the way he kind of defined this as, in when we talk about smart money, is that think about um, the way a candle forms, the way a daily candle forms, I should say. Now, whenever you see a daily candle form, you usually always see a wick at the bottom, the body, and then the wick at the top. And the way my mentor described it was that Larry Williams, was like, how awesome would it be if you were that person that knew that wick, that was going to be going down before it formed the body. And then my mentor, the Inner Circle Trader, decided to basically devote his life trying to figure that out. And in doing so, he found out a lot of things, and he taught us a lot of things. And anybody that is following my channel or has been through that mentorship or who has followed ICT, you probably understand what I'm talking about. Um, and it's there's a lot in there. And what these these big money people do, these smart money people, they absolutely manipulate the prices. Like, there was somebody, again, I always go back to Twitter because there's always some idiot on Twitter that just has a blue check mark and who says just something so asinine. I'm like, what? Like, he asked if Bitcoin was being manipulated. And I know a lot of people out there are stubborn, and they don't think that a cryptocurrency can be manipulated. Yes, all markets are manipulated, right? There's somebody out there that has way, way, way more money than you. They own way, way, way more the market than you. And they have the ability to push that market the way they want it to go. Okay? That's just the truth of life. It's just been there ever since day one. And learning about it in forex first, and seeing it in crypto, it's just it's obvious. It's so obvious that I don't know how anybody can even deny that. And so what I want to do is I want to go through some charts and try to point out some of these, manipulations, I guess you could say. And then we'll talk about possibly the consolidation part, and we'll try to point out some previous ones too, just so we kind of get the gist of what's going on. But again, Smart Money Channel, what this is all about. If you don't know what it's all about the big people with the big pockets. They push around these charts, and if you're a retail trader and you're doing the same thing over and over again, you're doing harmonics, or you're doing trading off double bottoms or double tops, or looking at bull flags or bear flags, or looking at trend lines, I'm sorry, but you are not looking at the right things. You are looking at what they want you to look at, and they're distracting you so they can take your money. Right? Because there's literally, they've done the studies on this, only 10% of people actually make money in this business. And most of them are at the top. It's not your, I've gotten to the point where I've broken even and I'm starting to make money. Yes. And it had to do with hard work. It had to do with paying attention to what my mentor said. And, it actually had to do with almost a year of not even trading, of looking at price action and all this stuff. And that's what you guys have to do. So, yeah, it's just, it is what it is. So what we will do is we will go ahead and jump over to a chart. I didn't even do the opening thing here. Watch this. Okay, I just had to do it. All right, so what we are going to do is, I don't even know which one I have up first. I'm going to throw up Ethereum first, though. Am I on Ethereum? I am on Ethereum. Okay, I'm on Ethereum, and I'm on Ethereum weekly. There is a reason I'm on the weekly. Is because I like going from the top down. Because you get a better picture as to what is going on if you do a larger time frame and then break it down. So we can go all the way back to last year and see. I remember this like perfectly, like it was yesterday. This whole movement right here, that was the whole Tesla thing and all that stuff. And then that would have been Bitcoin, but it would have been around the same time. And look, boom. Okay, so falls back. Okay, so here is the distribution, right? Manipulation, consolidation, all that right in here. Let's see if I can even. Distribution, manipulation, consolidation. Distribution, a little bit of manipulation, just to pull back. Distribution. And then what we had since then, manipulation, right? Even though this happens on also a smaller scale too, we'll see more, a little bit less manipulation, a little bit more distribution sometimes. And that's when we get our hopes up, especially when it gets up to like these highs. And everybody thinks that it's just going to keep going and going and going. And whenever I see tons of green candles like this, that honestly, especially on a weekly basis, that worries me. Because that just means it's got to come back. Because price looks for two things, right? It looks for, always be balanced, right? And it also looks for liquidity. And both can be true at the same time. And what do I mean by liquidity? I mean that there are people that have sitting, orders in the market, and price is going to try. They're going to try to force price toward those areas to where people think that there is a safe spot for either a resistance or a support area, something like that. The people with the money are going to be forcing it toward those areas to try to hit those areas to flood the market with liquidity. That way they can then go against it again and take your money. right? So, which would have been most of all of this coming down. Now I'm gonna see if I can't. I know my charts are kind of erratic and all over the place, but believe me, once I try to explain it to you, it will help you. Okay, so we have, if we take a look at the weekly, we look at the weekly bullish order block over here, weekly bullish order block over here. What is a bullish order block again? Okay, it is the last down candles, right, before the up candles go up and close above them, right? So technically this is a bullish order block where this last red candle starts, right? Or this last red candle starts going down. Technically they're supposed to start at the wick. I usually put them at the body because that's where it usually ends up. Sometimes it'll be the wick, it just depends. But most of the time it's the body. So here we have, these two down candles, right? And then we have, boom, four huge up candles. 4 weeks in a row, we just kind of exploded right there. And to me, and even though, well, right here is a fair value gap. So fair value gap is, of course, in between 1 week and another. If the wicks do not touch on either side, it leaves a gap, a fair value gap, right? And that is an imbalance. And that is something that the charts want to come back to. Even though it's weekly, and even though you want to get down to like the 5 minute, 15 minute, and you're going to see a bunch of ups and downs in here, it doesn't matter. The algorithm still feels that weekly of that imbalance that is there, and it wants to come back to that. And so whenever I see something like this, I know, oh crap, we're going to come back to this, right? I try not to get too excited. I try to make sure that I know that I'm taking profits along the way, and I try not to get my hopes up and I never try to guess the top. I always just try to, try to pull out profits along the way, because if not, then it's going to go against me and I'm going to lose everything that I earned on that way up, right? So I can probably get rid of these. These don't even matter anymore. So on the way back down, right, here we have a daily fair value gap. I put a little rectangle right above here because this is where it's going to be aiming for once it comes back up. How do I know that? Because there's just equal highs right here. There's just quite a few equal highs. So whenever it does come back up, this is one of the areas it's going to be aiming for. So that's one of the reasons I do think this isn't the end of crypto. This isn't the end of Ethereum. So anyways, it pulls back down into this weekly fair value gap, right? What does it do? First one hits, boom, bullish order block. Bounces off of it. The bullish order block also was about halfway through these fair value gaps. Now, how many times have I said this? Always measure halfway through your fair value gap, because generally, almost all the time, whenever it comes back down into these fair value gaps, it almost always gets to the middle before it does some kind of dead cat bounce or something like that. Now that doesn't mean it's going to take off from there, but it usually does give a good indication that it will start moving the other way. And then of course you see it go the next week, boom, goes all the way through, fills the fair value gap. Perfect. Not a problem with that. That just means that the imbalance has been filled, right? That's kind of something we want to see. We want to see that imbalance get filled. Now it comes back up, and now we're starting to move back down again. Not a problem, because guess what? Look over here. 1, 2, 3. 3 times did we hit this bounce before we finally took off. Again, that's that consolidation. That's what I have a feeling is what is going to happen here. And again, like I said, we're still bullish as long as we are above pretty much any of these gold lines I have drawn. Even these lines down here, I mean, I would hate for us to get us below this red weekly candle. That would be probably the worst case scenario. But I don't think we're going to see that. I really don't. I think probably the worst case scenario is that we're going to see this one right here that I'm clicking on. That's at 2003. And that is because that is about halfway. Basically, it is the halfway point of the red candle, of the body of the red candle. The lower portions, I don't think so, not as much. Once we get down to the daily, I think we can probably see it a little bit better as to what is happening down there. Yeah, see, the top of here, you can see it already. So it moves down, then it goes up, and then it comes right back down. So that right there, this is actually a breaker. It's a breaker and a bullish order block at the same time is what this is. So what that means is that this would probably be the last, absolute last. It could get a little bit lower, but it should be one of the absolute last areas that the price could get to. Now, it could get a little lower to this area here, to, what is this guy? 1918. I mean, maybe there. The very, very worst, it would probably get down to 1841, right? And that is because there is a daily fair value gap, which means that there's a gap in between here and here, right? And so if this were to drop even further, again, it would probably still consolidate and then maybe make another drop. Like I said, we could be on this ride for another month. I've said March for a long, long time that we won't see a good run from crypto until March. And that's just because I did a lot of digging. I looked at a lot of futures of metals and things like that, things like graphics cards, you name it. I looked at a lot of different things, and from what I saw March was the month that we would probably finally start to get out of kind of this funk, I guess you could say. And it's not that, you know, people are selling or trying to get out or anything like that. It's just that the people who own these charts, they can push it around and they can do whatever they want with it. And then they want people to freak out and sell. That's what they want people to do. They want people to freak out and sell, so that way they can snatch it up at a lower price. That's the manipulation part, right? So manipulation, consolidation, and then who knows, maybe even some more manipulation, maybe more consolidation, and then eventually we will have distribution, and then the distribution will be going back up this way. I did see some good signs in this area in the 4 hour. That being said, what I saw was this, and I'm actually going to delete some of these golden lines down here so it doesn't get so confusing. And I'm going to draw a fair value gap right here and pull this over. Okay, so that was a 4 hour fair value gap right there. So what I saw was that there was also this 4 hour fair value gap, in that whenever it went up, it actually filled this 4 hour fair value gap to the top. Whenever it's coming back down, well, at first it was barely entering it. This one made it a little bit deeper, but still it seems like we're trying to make our way up into the upper fair value gap more than we are more so trying to dig down into the lower fair value gap. So, like I said, the worst I think that could possibly happen would us be getting down to this rectangle down here, which is a daily fair value gap right there. I really think that's probably the worst it would get. Again, 1900 something or less than 2000. Hey, if it does get down there, load up. I mean, don't take anything I say as financial advice. I'm just saying from experience. This is what I'm expecting. And then you have, a lot of fair value gaps and breakers above here. All right. So what that could possibly mean is that it could just be a little bit of a struggle trying to get up and out of that, because it did just kind of like fall so hard that there is just open area, right? And when there's such an open area, and it does want to fill that open area because there is, an imbalance in there, sometimes it just takes some time. Or it could be the opposite way. It could just shoot right through it, and then generally once it does that, then those areas act as support, right? So the daily fair value gaps, weekly fair value gaps, those kind of areas, they will then start acting as support, rather than resistance trying to push it back down, things like that. So let's move on to Bitcoin really quick. I know I'm trying to get through these as fast as possible so we're not so bored. Thanks for watching, and remember to always wear your pants, guys.